All right, everyone, welcome to the weekend video. It's Friday evening here. Again, I'm starting a little bit earlier to kind of wrap up the week so that to avoid falling asleep as I have tended to do almost in previous videos. So I hope to keep this a little bit more up, upbeat and at least awake. Okay, I'm going to go through the six markets. I'm going to dive right into it, and I'm going to try my damnedest to keep it a little bit shorter. I'm going to start on the currencies this week and work towards commodities. All right, so here we are, euro dollar. This is the 4-hour chart, and so far so good for the bearish outlook. I was talking to one of you guys during the week there, and there is a little bit of kind of let's say doubt about the the tail end of this action here as to what might be happening. But it's not. Let's say it's not particularly critical at the moment. The kind of argument at the moment may be the fact that there is between this wave 4 here and this wave 2, there is a sizable difference in the relative size. Let's say so. This wave 2 here uh, it took quite a while to complete and looks far larger than this internal wave 4 here, which was a contracting triangle, I believe. So the suggestion may be that what is actually happening here could be wave 4 within wave 3, which I'm quite open to that as well. That's the alternate count at the moment. And either way, it still suggests, a corrective action. And the only, let's say, significant difference would be that this wave 4, if it was wave 4 brown that was happening here, this wave 4 should not rally any higher than 122.12, rather than wave 4 green should not break 121.50 or so. That's the only difference in, say, the consequences of that, let's say, alternate count at the moment. But so far so good. I mean, we've got a nice acceleration down in a definite third wave anyway. Um, the pattern seems to be kind of clicking along and hitting targets. And for the moment, we've obviously momentum has kind of stepped back up again, and should be within a fourth wave correction. Which degree it is kind of open to interpretation. Let's get to the short term count after today. I think we're still within let's say wave B of this fourth wave correction, because say the rise of yesterday's low at wave A, excuse me, the rise off yesterday's low is in a clear three-wave pattern so far. So that suggests a B wave rather than a new rally and a C wave. So I think we could be seeing possibly an expanded flat correction here, maybe. If we get further advances, that if let's say if this pattern develops into a clear five-wave pattern, then it'll just kind of advance the larger wave 4, or sorry, it'll advance the labeling in the larger wave 4, and this wave C will come in here somewhere. The target kind of remains the same. We're still looking. Excuse me. Every time I hit record, my voice drops 2 octaves, and I start coughing. It's like white coat syndrome. You go to the doctor and your pulse rises, by 20 beats or 30 beats a minute. Okay, so this is the previous wave 4 here at about 120. So still looking for a possible end to this corrective pattern in about 120, and in 3 waves overall. So that the kind of let's say the perspective that we're viewing this rise does not change. Okay, so for early next week, I want to see if this is a expanding flat wave B. I'd like to see it drop below the previous wave A there into about 118.60 to complete again, and then we'd see a rise early in the week in wave C brown to complete the larger wave 4 green. And then we'd start declining again in wave 5. Okay, so pound dollar. Let's go to the 4-hour chart in pound dollar. Pound dollar, again, the labeling, because this is a decline into a new trend again, the labeling can be left open to interpretation. Maybe beginning with a too low of a degree here. So it may be the case that this, what's happening here is, let's change this on the fly. It may be the case that what is happening is wave 1 in green labels here, which would be 1 degree higher. But either way, the market is moving down nice and impulsively. We've got a break of the previous kind of initial key resistance, let's say, at this previous wave 1 here. Kind of the next step for this pattern to confirm, let's say, a change into a downtrend, or the turn into the larger downtrend, would be a break of this previous wave B low here at 130.40. Once we get a break of that, that'll probably be within a third wave down. So either wave 3 brown or wave 3 green. It depends on what we kind of go with on that. What's to say here that we could have wave 1 complete, and we may be correcting within wave 2 here. It's open to interpretation at the moment, but we might change. What's kind of popped into my head here is this: if we go for a larger labeling, we could be seeing the completion of a third wave here, and maybe an expanding triangle within a fourth wave, which would be 5 internal waves, which expands the breadth, or expands the range into a completion of a correction at a new high, let's say above 136.17. This is let's say a working thesis again, which still suggests a further decline ahead early next week. For the moment, we may be complete on a second wave. The reason I'm kind of skeptical of this is the relative size of this possible second wave in comparison. Let's go to the 4-hour chart in comparison to the size of wave 1. So you would expect, in a second wave, a bounce up to this, probably the 138s, where we meet the declining 200 period moving average there. So that would be kind of like a significant resistance for a second wave. In a second wave, in general, you tend to expect a 50% retracement or something like that. Now, if next week we start to see a rally into a kind of a significant retracement in the kind of 38 or 50%, then we'll shift up this pattern possibly by 1 degree, and we'll work with that as it goes on. For the moment, I think we will. I'm gonna stick with the current labeling at the moment. Like I said, the action next week could, let's say, displace this count and trigger an alternate. And if it does, if we get a corrective rally above, let's say, 137, the high 137s where this pinch in price was, then we will look at calling that a larger wave 2. And I'm kind of, now that I think of it, I'm probably leaning towards that. But if it happens, it happens. For the moment, if we're going to stick with this particular pattern, we should see a kind of a 5-wave pattern down again, in an impulse wave down in 5 waves, and a 3-wave recovery to a lower high, which would again give you another opportunity to short this market. And I think for the long term, we're looking pretty bearish in euro dollar and cable. Okay, so let's get to dollar yen. I think we're still correcting again in a large degree, fourth wave here. And we should see early next week, we should see a pop higher in wave 5 of a possible wave 1. So I'll go into the shorter term chart right there in a second, and I'll explain to you why I think that. But in general, we've got a nice beginnings of an uptrend here. Um, so far, so good for the bullish interpretation. And if this is a large degree wave 2 here complete, well, then we're looking up for a significant period, possibly into the year, 18 months or longer for the dollar. Okay, let's get down into this 30-minute chart. I should go to I'll leave it at the 30-minute chart for the moment. This is the correction we're looking at here, the fourth wave here. We'll go down. This is the equivalent fourth wave. For the moment, I was labeling it as a possible zigzag 5-3-5 pattern. Today's action was quite it was quite anemic. There was really nothing going on. We've just kind of drifted to the side here, where I would have expected a drop into a third wave. Now, unless this third wave is, let's say, let's unless we're getting an extension within a third wave, where Monday or the overnight Sunday brings us down significantly lower, down into the 108.70 or 108.50 level, then we may look to kind of change this internal labeling. But suffice to say that it don't really matter for the moment, because I still think the larger correction, or the let's say the action at 1 degree higher, is still within a correction in a possible fourth wave. So early next week, I'd like to see, let's say, a drop into the low 108s, and let's look for a pop higher then in wave 5 of a possible wave 1. So that's dollar yen. Let's get to stocks. I know some of you might be a bit, how would you say, disappointed or frustrated with the action. Well, I know I am in general in the Dow at the moment, but I still believe that we are in um, a corrective rise in the Dow, and I think this is most definitely a large degree right shoulder off the all-time high there. I don't think you can view it, for me, I don't think I can view it in any other way as a three-wave corrective rally. It could be a pretty complex flat, three waves in A, three waves in B, and a five-wave possibly complete this evening, or close to completion in a wave C. So I've been looking for the completion of at least 3 degrees of 1-2 patterns, let's say impulse waves to the downside, over the last month or 2 months maybe, or sorry, let's say 6 weeks, and we've had kind of failure after failure within this pretty damn complex overlapping structure, which does speak to a correction in general. Um, but for now, I think we've got a handle on this three-wave pattern here, and let's get down into the hourly chart just to kind of pick it apart a little bit. So we had three waves up in A, three waves down in B, and then this wedge pattern in ending diagonal in wave C. So 1, 2, 3, 4, 5 in wave C. That completed wave A. So then we had three waves down in A, a possible three waves up in B, and then a possible three waves down again in C, which would create, which would qualify this large wave B here as maybe a triple combination wave, which again, it adds to the complexity and adds to the just the downright um, awkwardness in labeling this action as it goes on. But for the moment, wave C seems to have worked out in a pretty clear five-wave pattern. We've got one, two, three, a nice sideways wave four that we were looking at during the week, and then an extension higher in wave five. Now we've broken, on my chart anyway, we've broken previous resistance there at 24,857. And that was the previous wave A high. So that is the minimum target for wave C to complete. The fact that we've come down off that high again, uh, obviously it was a pretty key resistance in any sort of trader's mind. You would be looking at that previous high as as a possible target. So that was probably some profit taking there, which would it's Friday, closing out positions. And the Dow has dropped off that high there. So we're down, coming into 100 points off that high, which shows you the size of the correction here. We're looking at like thousands of points in range. So if in fact we have a five-wave pattern complete here in wave C, well then early next week should be pretty critical, or next week in general should be pretty critical. Do we see an impulse wave off that high again? Previous fourth wave is low 24,000, so 24,198. If we see five-wave pattern breaking previous interim lows, well then again that just kind of speaks to a shift in to an impulse to the downside rather than a kind of continuation of this kind of lurch sideways to up that this correction has been tracing out over the last what's that, 6 weeks. So I think early next week we should get a kind of a tight handle on the hopefully possibly the continuation of the downtrend. Um, let's see how that works out. We'll look for five waves down, by Tuesday maybe, and then a correction to complete at a lower high by the end of the week. So that would be the kind of game plan for this pattern. If we see a pop on Monday up to that upper trend channel, well, that would just kind of complete the picture quite nicely, wouldn't it? Okay, so let's move on to gold. And gold again is in one of those strange transition periods. Like we've got this huge sideways overlapping pattern here, which is nothing but corrective, which is completing now and uh, should complete wholly and completely by next week. The In general, I'm looking for this as a second wave to complete, and we get an impulse a structure higher in a very rapid, quite possibly a very rapid move higher in wave three. If you can see how wave one worked out there, it took all of 12th of December into the 25th of January. So it took all of 6 weeks, 6 weeks, and it took the market up 150 points. So again, we should be looking at a higher move. Sorry, $150. We should be looking at a higher move, a larger move in wave three, into the upper 200s, maybe $300 move off off support here at about 1300. So you could be talking about 1600 in wave three. But first, we need an impulse pattern to the upside at a lower degree, and we haven't got that yet. I don't see this move off the low as impulsive at all yet. And the reason being is the amount of overlap and the amount of three-wave patterns that's kind of played out. Granted, we have a five-wave move here off the recent low at 1303, but I think that 5-wave move is within a minor degree wave C of 4. I don't have labels on that, but I'll put labels on that later. We've gone down to a kind of a minute degree here in this pattern, and I still think we'll get a drop below 1300 to complete a possible 5 waves down. So we're looking at wave C here, wave C in brown. So C waves are usually 5 waves to complete. So we have wave 1 down, correction in wave 2, then we have a extended wave 3. We have a further correction, sideways move, possibly triple combination again, or sorry, some sort of a combination wave, or we could call it a complex flat by the fact that it's got so many 3 waves patterns here, and then a possible 5 waves in a C wave to complete. We've got it. It's still stuck within a trend channel to the sideways. We've got it to the side. We've got a pop higher to into that kind of previous 1325 region, and again a drop this evening. So we could have a complete 5 waves here, a 3-wave pattern overall to complete a large degree, or sorry, a minor degree 4th wave. Right now, I'm still geared for one final drop below 1300 again to complete 5 waves down in wave C of 2. And then at that point, we'd be looking for an impulse wave to a higher low to complete. So to kind of sum that up, I still think we're in a correction here, and we need one more drop to complete the larger pattern in wave C, and we'll be looking for that to happen possibly by midnight, by Wednesday next week. Okay, so that's gold. Let's move on to our final market, crude oil. The early signs are that crude oil is topping out. Uh, we seem to have a 5-wave pattern complete. We've hit the area of that 161.8 extension of wave 1. So we take the height of wave 1 and we project it off the low of wave 2, and that gives us a possible target for wave 5. I think that we are pretty damn close to that happening right now. We've got a series of, a lower high here in 4 hour on the 4-hour chart of, in both MACD and in RSI, and we see RSI is kind of shooting lower now towards the to a central line, a bearish central line cross, and we should see that moving average line come down now again. For the short term, I really don't want to see any higher than 72, because that kind of it might complicate the larger pattern. But I would like to see early next week impulses to the downside to start building up. Right, let's say capping off the market and building momentum to the downside. Let's go to the 1-hour chart here. So it is possible to say that we have a 1-2 pattern complete at today's high. The market is starting to move down again as we close, but we'll have to see 5 waves down complete off the recent high in order to kind of let's say bump up our confidence level a little bit. This final move higher in wave 5 to me is looking most likely like an ending diagonal, or sorry, some sort of a wedge pattern anyway. The kind of the break of the Iran deal kind of did kind of instigate a kind of a knee-jerk reaction in the market, and that seems to have petered out by now. So we want to see a kind of a closeout of that larger 5-wave pattern, a kind of a move down into key support levels. If we get a break of that 66.37 key support next week in a 5-wave, within a 5 wave pattern to the downside, well then yeah, I pretty much flick the switch and change to a completely bearish outlook. And the reason that key support is at 66.37 is the previous wave one of that larger five-wave pattern. We get a break of that previous wave one high, and then you can probably kiss goodbye to this larger corrective pattern to the upside, and that would close out how many degrees of trend there now? 1, 2, 3, 4, 5, 6 degrees of trend. Uh, 5 waves up in blue, 5 waves up in wave 5 of blue, wave C complete, and a larger degree wave 4 complete. Um, let's see if we can. Yeah, we have the daily chart here, and the reason I'm looking at a large degree correction is 3 waves up in A, contracting triangle in wave B, and then last October we were looking at a very bullish setup, and we went all in on the bull side, and we got a large move up into our targets at around $70. And right now we have, let's say, all the boxes ticked for this correction to be complete. So over the next week or two, we'll look for signs that we'll look for a completed impulse wave to the downside again, and we'll look to see this market starting to move down again in wave 5 here, and I'm looking for it to go a long way down as well. Okay, so that closes out 6 markets, and it closes out a week. I hope you had a good week, and I hope you have a great weekend. Godspeed to you all, and wish you a happy and healthy and safe weekend. And we'll see you back here Monday night again, and we'll do it all again. Bye bye.